What's up, everyone? Welcome back to the channel. My name is Josh, and I am just your average Joe day trader. Today, we're going to break down one of the most powerful continuation patterns known in technical analysis, the bullish and bearish flag. If you've ever seen stocks explode higher or drop like a rock after consolidation, chances are you've actually seen one of these two flag patterns. By the end of this video, you're going to know how to spot them, understand their psychology, and most importantly, how to trade them. A flag pattern is a short-term consolidation that happens after a strong price move. Think of it like the market is taking a breather before continuing in that same direction. The pull, which you can see in this visual, the pull going up and the pull coming down, is the strong move up or down indicator. And the flag, which you see here, going this way or going this way, is the sideways or slightly slanted channel that forms right after the flagpole. A bullish flag happens after a big upward move. So you can see here, we have this strong uptrend where then it turns into this consolidation flag running sideways, and you could say almost down, a little bit of pullback. And then when it turns, you have this strong uptrend, okay? And we call this the engulfing candle if you've been looking at my other training videos. But you have this strong uptrend, which then breaks above this resistance level. And the target is the height of this pole. So you have the entire run of this pole, pulls back, and then once it gets to this break resistance part, basically the target is the next pole height, which should match this pole height. And we add that pole height to the breakout. So you're going to have breakout here, boom, pole height, the same as this pole height. And the other important thing to remember is to make sure that you are setting your stop loss just below the flag support. So this is support right here at the bottom of this flag before it turns. And so you want to set your stop loss here. Now let's talk a little bit about the bearish flag. And you can see the same thing, but in the reverse. After the steep drop, you have a point of consolidation. After the steep drop, the stock starts to consolidate in an upward momentum, and it's running sideways. And then once the sellers step back in, boom, this thing is going to break through any support level and continue on a downtrend lower and lower. Also, just like we talked about with the bullish flag, you have basically your flagpole, your consolidation, and then your flagpole, which should be equal or greater to the original flagpole, which started the flag itself. So now let's talk for a minute about how to actually trade these flags. I put an actual chart in here. I kind of took a real live scenario, threw it in here with the flag to kind of show you what does this look like, where you should be considering several factors. But first, you're going to confirm this strong pull, right? You want to confirm this strong pull first. And then the next thing is that you're going to make sure that the flag is tight and is not too wide. So you see here, this is a nice tight flag formation consolidation. And then you want to wait for this breakout confirmation before you jump in. You don't want to jump into this too early. So you basically are waiting for the breakout. You can see this nice engulfing candle, which gives you that bullish sentiment that it's going to run. And then you enter after that breakout confirmation, and it runs up. Volume also shows you here, which I share with you. I use my MACD with this volume here in my charts, but here this volume signals that it's getting ready to launch. So you use volume along with it, and you're running this up. And then always set your stop loss, and you want to set it below the flag's lowest point so you can ensure that you're not losing any money if it turns around and breaks hard the other way. And pretty simple, everyone. This is how you trade and understand both the bullish and bearish flags. This is very simple, but very effective when used with proper risk management. If you find this helpful, hit that like button for me, hit the subscribe button for me, drop a comment below and let me know how you feel about the training or anything else you want to share. But also, if you would like to see additional training lessons like this, then hit that notification bell so you'll be notified every time I upload a new video. And also let me know in the comments, what patterns do you want me to cover next? What patterns do you tend to find that you would like to know more about? And I will work on creating some videos to go over those patterns. Hey, thanks for watching. Be safe, trade safe. Josh out. Peace.